Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, all the indices up more than 1% right now. And you know, during trading hour, when we were talking about how markets are higher, I didn't think we can actually build onto those gains, but we have done that. The Nifty surged above the 25,800 mark. Now it has come up from those levels, but there's nothing that bulls can complain about.
Absolutely nothing to complain about. All the indices in the green, and it's actually the benchmark indices that are actually outpacing the broader end of the markets. And the advanced decline ratio, as far as the benchmark or the Nifty 50, is something that's very, very strong. We have a lot lined up on the show. Let's start off with the top headline. Benchmark indices scale new highs as stocks charge up in a broad-based rally. Metals, autos, industrials, and realty lead the charge. IT and pharma lag. Mid-caps relatively underperform.
The Reserve Bank of India has permitted IIFL Finance to resume gold loan business from September 19th. The move, which had significantly impacted its business in the segment, comes as a big relief for the lender. The stock jumps.
Mankind Pharma surges ahead of its board meet, which will consider fundraising for their BSV acquisition. Company plans to raise 4,000 crore rupees from internal accruals and expects around 70% funding from debt for the acquisition.
Woodco surges over 8%. The street gets excited over company potential for extending loan assistance of 0.75 to 1 lakh crore rupees under Pradhan Mantri Awas Yojana Urban 2.0. Management tells CNBC-TV18 that the potential capex under the scheme is 13 lakh crore rupees.
ITD cementation zooms nearly 20% after sources tell CNBC-TV18 that the Adani Group is set to acquire stake in the company.
Okay, all right. It is that day when Nifty is again scaling new highs. We crossed the 25,800 mark. Right now, we have come off those highs and below the 25,700 mark, but still maintaining gain of around 1%. The Sensex, which is up around 1% as well, and it is all led by Bank Nifty, which is contributing to the gains that we are seeing right now. But some names which have come off from the highs in last couple of minutes would include the likes of TCS, we have NTPC, but nothing which is deterring the big move that we are seeing. The Bank Nifty too should come a few on the screen because it has come off from the highs of the day. So something like an SBI is the one which is lower. We have TCS, Infosys, Axis Bank, all these names which are pushing the Nifty lower from the highs of the day. But again, as I said, the index continues to do really well overall. But you know, the mid caps which were not participating yesterday, they have made a move as well. So the advanced decline ratio is very strong.
That's right. You know, some of the PSU stocks managed to make a slight comeback, and that'll be something that's quite positive given the fact that a lot of the PSU stocks have taken quite a sharp knock. You know, one stock on the radar, BHEL, seen significant selling pressure from its recent high. Today, holding quite steady, around 2.5% higher in the session today. But a whole host of other stocks on our radar. Hormaz is standing at the wall. Hormaz, which are the stocks in the broader end of the markets that are making the moves?
The broader markets are definitely making a comeback, even as the benchmark indices are seeing some bit of cooling off from the higher levels. But yes, there are plenty of stocks in the gaining end from the broader markets. Let's start off with ITD cementation, a news that we've been following for the last few months. That stock is locked in an upper circuit of 20%. Prism Johnson has sprung up again in today's session, another 12% higher there. BSC now almost at 4,000 is the stock, now 7% higher for BSC, and IIFL Finance after the RBI relief. Now at one point was up 13%, but still holding on to gains of around 8%. PSUs have made a slight comeback, as you just mentioned, and shipbuilders can't be left behind. Mazagon Dock 6.5%, Cochin Shipyard 10%. It's also a FTSE rebalancing candidate, so some inflows anticipated there. And of course, Garden Reach Shipbuilders another 8.5% higher today. Some of the non-shipbuilding PSUs also, particularly within the railways, are making a comeback today. RITES, IRCON, and even HUDCO. We spoke to the management today, 7.5% higher on that stock as well. Stocks that are doing well on the back of very strong volumes in today's trading session, and they'll come up on your screen. They're starting off with stocks like Mankind Pharma on positive brokerage commentary, Devyani International, Asahi India Glass as well. But there are some stocks in a market like this as well that are not doing well. KEC International is one of them, the top loser on the Nifty 500, also in response to the ITC cementation story. 4.5% lower there. Polymedicure and JBM Auto 2 at the lowest point of the day. Back to you guys.
Okay, all right. Thank you so much, Hormaz, for joining us as always and telling us which stocks are in focus. But let's get a technical check on the markets. Hemeen Kapadia from KR Choksi Securities is joining in now. Hemeen, good afternoon. Thank you so much for joining in. If you can tell us what are the important levels to watch out for on the Nifty. We have seen some fall from the highs. Of course, it's not alarming yet. But do you think we'll be able to sustain these levels?
A very good afternoon to you, Sonal. Thank you for having me on the show. Sorry, it's a pleasure. 25,800. Okay, these are uncharted territory, Sonal, obviously. No known resistance levels. But yeah, 25,800 will obviously now act as a resistance level that needs to get taken out. But maybe, like you said, it's not yet alarming. It's maybe just a one-off thing. And we need for Nifty to sustain above 25,470. I think that is important. If it does that, it's okay. We've had a brilliant run. It is getting a bit overbought, but 25,470 is important. Bank Nifty 53,357 was the all-time high. So I thought we would have taken some time to consolidate, sort of take a breather and then move up. But it went above that today. I don't think it's going to close above that. So previous all-time high, it's natural we expect significant resistance. So that's what we are seeing. So as of now, Bank Nifty is playing catch up. Nifty is facing resistance at levels we haven't seen up till now. So I would say a small pull-off is there probably in the offing. The VIX is not suggesting anything yet, but yeah, the way we've seen the price movement in the last half an hour or so, Sonal, I believe there is either call writing or resistance at these levels that we spoke about.
Thanks so much, Eamon. In fact, quite a sharp sell-off from the highs. The Nifty given up almost 250 points. 25,800 is where the intraday high was. After that, even the Bank Nifty has given up quite a bit of gains. In the last 10-15 minutes of the session. Eamon, which are your top trading bets for the day?
Well, it's still too early to give a small sell call away. But yes, the way it's fallen off a cliff is a bit disconcerting. But yeah, stocks to look at. In terms of recommendations, firstly, a buy call on Nestle India Way. 36 weeks of a consolidation, 36 weeks. This is the 37th week between 2340 and 2650. Listed history, we've closed twice on the weekly chart about 2650, but haven't sustained. So we're on the cusp of doing that. Friday weekly charts are closing. I'm assuming the closing comes in about 2650. So that happens. One can buy Nestle at around current levels, stop loss of 2600, target of 2810. A 37-week breakout is a significant one, I believe. Secondly, Vivek, a buy call on DLF. DLF has been moving sideways for some time. There is resilience. It's formed a rounding bottom on the weekly chart. The mechanical indicators after 5 or 6 months are beginning to look up, are giving crossover buys. Everything seems to suggest that we are set for an up move. It's also for the 55-day exponential moving average, high tops, high bottoms. Everything seems to be falling in place on technical parameters, obviously. So one can buy DLF at 865 away, stop loss of 840, target of 915.
Okay, all right. Thank you, Eamon, for joining us. While we're talking about this fall that we're seeing from the highs, it's quite swift actually. And the banking index and the IT names, they should come up for you on the screen. Look at that. It is almost a 250-point cut from the highs that we are seeing. It is contributed by the Nifty Bank. Something like an SBI, you have ICICI Bank. These stocks have come up from the highs. Nifty IT, that is the main reason why we are seeing this big fall. So we have the likes of Infosys in the Nifty IT pack, which has led to this fall. And Nifty IT has come off sharply and is at the day's low. And these are heavyweights that we are talking about, right? So Infosys, there's HCL Tech, TCS should also come up for you on your screen. All these stocks, a sharp fall in last couple of minutes. We also have Bajaj Fin, which has come off. ITC is the other important weight, which is coming off from the highs, and that is the one which is leading to the fall that we are seeing right now. HUL. So some of these consumption names too, they've come off sharply, and that is the reason, Vivek, we are seeing that fall coming by. And that's quite sudden. So Nifty IT is the one which is contributing to the fall, and
see,
the Nifty
plate,
Bank.
Nifty IT has seen a very sharp dip, and that's actually caused the Nifty to lose almost 300 points from the top. And this particular fall is quite swift. It's happened just in the last 15-20 minutes of the trading session. But let's move on. We'll slip into a short break. Ajay Kanwal, the MD and CEO at Jana Small Finance Bank, joins us next to discuss their growth outlook and more. Welcome back to Mid-Cap Radar. Like we mentioned, the market has seen quite a bit of a sell-off from the high levels. In fact, the Nifty cooled off quite significantly after hitting the 25,800 mark. Now closer to the 25,550, or 50-point bounce in the last couple of minutes. But like we promised, remember, we have the management of Jana Small Finance Bank waiting by. Jana Small Finance Bank has launched a new liquid plus fixed deposit offering, providing an interest rate of 6.75% per annum. The offer is effective from September 19th, and it aims to attract short-term funds. To discuss this and more, we have Ajay Khanwal, MD and CEO at Jana Small Finance Bank, joining us. Good afternoon, Mr. Khanwal. Thank you so much for joining us. First up, talk to us about this latest offering of yours. And number two, how has business panned out as far as Q2 is concerned?
So first, a very good afternoon to you and all the viewers. This product is interesting because we did feel that when it comes to short-term money management, we probably don't have a competitive offering as a bank, or probably even as an industry, I would say. And we looked at where do people really go? They go for liquid funds, they go for short-term debt funds. And we had seen a fair amount of equalization from a tax angle. But that did not mean that that would be the reason where, whether it's CFOs or treasurers or people with short-term liquidity, why would they keep money with banks? We found there are 2-3 areas where we had to really change. The first one was making sure that we give a fixed return for a period of time. So we decided that between 7 days to 180 days, whenever you withdraw your deposit, I will give you a flat rate of 6.75%. Second was, banks typically have prepayment penalty charges when you break a deposit, which in a short-term industry doesn't exist. So we took that away completely. The third piece was around partial withdrawal. I don't need to withdraw all the money. I really want to withdraw part of it. So we kept a partial withdrawal facility also as a fourth feature. The fifth one, we said, listen, somebody doesn't want to partially withdraw. I would like an overdraft against it. So there is an instant overdraft facility at a very nominal charge. And finally, payment is at T+0, which all banks do for deposit. So I do think from our perspective, we looked at short-term money management, and we looked at where are the gaps, why people don't come to us, or probably at a larger industry per se. And we put our best foot forward, and which is what we launched yesterday.
Okay, all right. Yes, please go ahead.
Sorry. And just to make sure that we understand this, our basic deposit book, 98% of all retail deposits are 1 year and above. So we really don't have a real short-term deposit book ever. Over the last 2 years with supply chain, vendor management, vendor finance, etc., we now have a short-term asset book. So it's easy for us to also match it off between a short-term liability coming and a short-term asset book at our end. So that was the primary reason we thought we will go ahead and make this what we think is a first of its kind from a bank.
Okay,
Sorry,
interesting product. Yes, it's an interesting product is what I was going to say next. Mr. Khanwal, now that we have this new product that you have put out in the market for short-term lending purposes, and we have seen this Fed rate cut that has come by recently, if at all RBI does follow suit, what kind of impact will you see on the asset and liability side, the impact on spreads and NIM side as well? And has Q2 so far been better than Q1 in terms of asset quality and otherwise?
So definitely Q2 has been better than Q1. Really 3 reasons. Q1 anyway is always soft for most of us, and we don't have good reasons for it, honestly. Second, heat wave did have some impact, certainly on people on the field doing collections, doing sales. It was a bit of a tough quarter, I must say. And we did see some impact of that. And third, elections did cause some amount of slowdown in some areas, not all of it. And there were 3 real factors which kind of made Q1 a bit more challenging. Q2 obviously a lot better from both the volume perspective, both from a collections perspective. So yes, it does look better. And on your question on where does interest rates go, see the reason why interest rates weren't probably going the US way, so to say, in the past, or probably even now, is on food inflation. I think once we get a bit of clarity around food inflation, I do think that our opportunity to relook at the direction of interest rates may be a reality. At least from what I see in the market, when we raise deposits, when we speak to consumers, it is certainly a softer environment than what it was in March. So it's still very competitive. but not as competitive as we've seen in March. So there is certainly a softening, so to say, in our head when we meet with consumers, when we do bulk deposit pricing, etc. There seems to be a bit more liquidity for sure in the system.
Oh, that's good to know. I want to, pin you down to a couple of numbers. As far as the FY25 guidance is concerned, you have an AUM growth target of 20%, a deposit growth target of 20%. Last time you spoke to us, you said that the cost of funds had peaked out closer to the 8.5% range. Do you stick to these numbers, and what is it that you're targeting for NIM as far as FY25 is concerned?
So yes, 8% is a cost of deposit. We will be at 8 or below. That's our sense. And I'll give you a very practical number. Our peak deposit rate in the first quarter of this year was 8.5%. Second quarter, our peak deposit rate is 8.25%. And which is what I said earlier, that I could see a bit of softness, and we are able to grow with the 8.25%. And I do think that interest rates in our mind have peaked out. Second on, 20% growth in deposits, 20% growth, which is our annual guidance. Our first quarter itself was 5% each, both in asset and in deposits. Only thing very important to us is, we are really focused on growing the secured asset.
Yes.
So our growth in the first quarter on secured asset was 8%. On unsecured was minus 1.5%. And to us, that is very important. It's not just growth, it's the quality of growth. And that's holding up very well. Similarly, on the liability side, our growth in CASA was about 9% and growth in fixed deposit was 4%. So, it's a 6.5-year completion in September. And as we evolve into a full-scale universal bank in the future, we would like to really move and get all the parts right.
Okay. Mr. Kanwal, last question before we let go of this interesting conversation. I know your MFI book has come off to 38% of share versus 100% when you started the bank. But considering where the industry is right now, there has been some pressure. How is your company trying to, work around the pressures that the MFI industry is seeing generally? And what is it for you in particular?
So I must tell you a bit about the stress and my view on the same. I think wherever companies have grown fast, because unsecured lending, if you grow very fast and you end up leveraging your customers higher, your stress levels are much higher. To that extent, we are slightly in a better position because our CAGR of unsecured loans between March 18 to June 2024, which is 6.25 years, roughly is between 1 to 2%. That's a CAGR for 6.25 years. So it's really not been something that we've been pushing very hard on. And which is why we can see that, yes, we do have a bit of stress. Nothing as compared to an industry which has really been growing at 25% CAGR annually, if you ask me. We obviously are seeing it peak out again in the quarter two. And quarter one, of course, was a bit more challenging because, like I said, heat wave election. So it just got, stress coupled with a difficult quarter made it look odd. We do think it'll peak out now. We don't have a bigger challenge here. And, our buy, so that we're very clear, is, we would like our microfinance customers, if they do want the affordable housing, if they have the business and they would like a business loan, they would like a two-wheeler, they would like gold loans. See, we do feel that financial inclusion has to go beyond unsecured.
Right.
Because we have to put it to productive use or asset building use, which is what we are very busy doing.
Mr. Kanwal, we have a lot more questions for you, but we are running out of time. We'll have you again soon on our show to discuss these questions in a lot more detail. Like promised, let's now shift into a short break. On the other side, we'll get you more on the markets and focus on HUDCO, which is buzzing in the session today. Stay tuned.
Welcome back. Let's quickly take a look at HUDCO. That stock is surging in trade today, and we spoke to the management where we spoke about the opportunity in the PM-AY scheme, the Pradhan Mantri Awas Yojana, and they said the loans worth 1 lakh crore can be disbursed under this, and also that yields will be nearly 9% under PM-AY 2.0, and it'll be the same level as the existing yields as well. So that's stock surge and management commentary and the opportunity that we are seeing. The Nifty too has recovered from the lows, so continues to be a very interesting day for our own markets. We'll track that for you very closely, but we'll take your leave on mid-cap radar. Stay tuned, your stocks when we return.